I now hand the conference over to Mr. Nishit Jalan from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Lizanne. Good morning, everyone. Welcome to Q3FY21 result conference call of Endurance Technologies. From the management team, we have with us Mr. Anurang Jain, Managing Director, Mr. Ramesh Sehani, Director and COO, Mr. Massimo Venuti, Director and CEO, Endurance Overseas, Mr. Satyajit Ray, Director and Group CFO, and Mr. Raj Mundra, Treasurer and Head Investor Relations. I'll now hand over the call to Mr. Jain for his opening remarks, post which we can have Q&A. Over to you, Mr. Jain.
Thank you and good morning to everybody. I would like to share details of how we have done in the third quarter of FY21 in the first 9 months of this financial year. In India, in the third quarter of FY21, as per the CM data, the two-wheeler industry sales grew by 14.4% compared to the previous financial year. Scooters grew by 4.7% and motorcycles grew by 17.7%. The automotive industry in India had a growth of 10.5%. In Europe, in quarter 3, there was a degrowth of 7.6% in the European Union automotive sales. On the financials, I will briefly talk to you about the third quarter of FY21 and the first 9 months of FY21. During quarter 3, as compared to the previous year's same quarter, our consolidated total net income grew by 23.9% from rupees 16,524.6 million to rupees 20,467 million. Consolidated EBITDA grew by 31.4% from rupees 2,724.3 million to rupees 3,579.7 million. Consolidated EBITDA margin percent is 17.5%. The net profit grew by 53.2% and was rupees 1,900.5 million at 9.3%. This quarter 3 consolidated financial includes the Maharashtra Mega Project incentive of rupees 234.17 million. The consolidated ROC was at 24.3% and ROE at 22.8%. There was no net debt as there was a positive cash available of rupees 1,357 million. During quarter 3, our standalone total income grew by 30.8% from rupees 11,708.5 million to rupees 15,320.5 million. Standalone EBITDA grew by 51.5% from rupees 1,737 million to rupees 2,632.9 million, with the EBITDA margin percent of 17.2%. Standalone net profit grew by 66.9% and was rupees 1,505.5 million at 9.8%. This quarter 3 standalone financial includes the Maharashtra Mega Project incentive of 234.17 million. October 2020 recorded our best ever net income of rupees 5,564 million for Endurance standalone operations, with a growth of 34.5% over the previous year. Quarter 3 has been the best ever quarter in the history of Endurance standalone business. Also, looking at our OEM schedules, quarter 4 in India is also looking very good. The standalone ROC was at 32.5% and ROE at 23.9%. There was no net debt as there was positive cash available of rupees 486 million. Now for the 9 months. During the first 9 months of FY21, our consolidated total net income was rupees 44,379.6 million as compared to rupees 53,511 million in the first 9 months of FY20. Consolidated EBITDA was rupees 7,318.8 million as compared to rupees 9,230.7 million in the first 9 months of FY20. Consolidated EBITDA margin percent was 16.5. The net profit was rupees 3,322.8 million at 7.5%. This includes the Maharashtra State Mega Project Incentive of rupees 871.49 million. During the first 9 months of FY21, our standalone total income was rupees 31,850.6 million as compared to rupees 38,357.7 million in the first 9 months of FY20. Standalone EBITDA was rupees 5,057.2 million as compared to rupees 6,276.4 million in the first 9 months of FY20, and there was EBITDA margin percentage of 15.9 in the first 9 months of this year. Standalone net profit was rupees 2,530.9 million at 7.9%. It includes the Maharashtra State Mega Project Incentive of rupees 871.49 million. We at Endurance are happy to inform you that the credit rating agency CRISIL has given a higher rating of AA+ with stable outlook as compared to the earlier AA with positive outlook for a long-term financing. We are informed that it is due to a well-diversified OEM base, both in India and overseas, which will help us in future in better than industry sales growth, good financial strength and risk profile, and improving use of our assets and operating profit. This is the highest rating for an Indian auto component company. We are told that only Brakes India has the same rating. The detailed financials are available with the stock exchanges and on the Endurance website. I would now like to share certain other key points for the first 9 months of this financial year. The first 9 months of FY21, 71.8% of our consolidated total income, including other income, came from Indian operations and balance 28.2% came from our European operations. But in quarter 3 of FY21, 74.9% of our consolidated net income was from Indian operations and 25.1% from our European operations. In quarter 3, more than 20% business growth was experienced from each of these OEMs such as HMSI, Bajaj, Royal Enfield, Yamaha India, TVS and Kia Motors. We practically grew with every OEM in this quarter. During quarter 3, our factories in India and Europe did not face any mandated lockdowns. We continue to do our best to ensure a safe workplace for our people. In India, in the first 9 months of FY21, rupees 4,440 million of new business was won from OEMs other than Bajaj, which included HMSI, TVS, Hero MotoCorp, Hyundai, Suzuki and Yamaha. This business will reach its peak sales in FY23. I would also like to mention that we have rupees 11,450 million worth of requests for quotes from OEMs, and we hope to win business from these RFQs. As our disc brake assembly business is growing with addition of Bajaj, TVS, Royal Enfield, Yamaha and HMSI new business, we are increasing the disc brake assembly capacity by more than 90% from the existing 2.85 lakh brake assemblies a month to 5.7 lakh brake assemblies a month, and also the discs will increase from 3.75 lakh numbers a month to 6.75 lakh number a month, which will be reached by August 2021. A new plant at Valoj is being set up for this increase. Luckily, we have 10 acres of land and this will start by August FY22. We are also setting up a cylinder head low pressure die casting plant at Patnagar, Uttarakhand for 720,000 numbers per annum, and operations have been slightly late, and now it will start in Q1 of FY22. In October 2020, in our oldest die casting plant at Aurangabad, our company announced a voluntary separation scheme for 86 confirmed workmen with a one-time payout of rupees 112 million. This will lead to an annual wage cost saving of rupees 48.7 million per annum and additional savings in canteen, workforce and insurance related to these 86 workmen. In the next financial year, we will also start supplies of brake assemblies, suspensions and aluminium castings, including the battery housing castings for electric scooters and three-wheelers. As mentioned earlier, we are focusing on getting business from OEMs and OEM-funded companies because of their financial strength. Due to increased orders from Bajaj and Yamaha India, we are happy to inform you that we are increasing our capacity by one-third, or 40,000 sets a month of alloy wheels to 160,000 sets of alloy wheels a month in our existing Chakan plant at Pune. And the production is going to start in Q3 of the next financial year, which is FY22. I would again like to mention that Endurance is focusing on a more value-add and profitable product mix in its future business, which includes 200cc plus motorcycle brakes and clutch assemblies with help of our acquisition of Adler and Grimeca in Italy in 2020. Paper-based clutch assemblies replacing the cork-based clutch assemblies for motorcycles. Supply of continuous variable transmissions or automatic clutch for scooters. Anti-lock brake systems or ABS for 150cc plus motorcycles. Inverted front forks and adjustable rear monoshocks absorbers for both domestic and export OEMs. This is with help of our collaboration partners KTM AG. Fully finished machine castings as compared to raw and semi-finished castings for two-wheelers, three-wheelers and four-wheelers. For our European operations, in the first 9 months, we have acquired 12.6 million euro of new business from Audi, Maserati and Fiat Chrysler. This business will start from the next financial year onwards. The consolidation of our foundry activities from 2 plants to 1 plant in Italy, which will lead to a saving of 600,000 euro per annum, has been completed. Both the Adler and Grimeca acquisitions, which included all the know-how, patents, brand and trademarks, has helped our Indian as well as our Italian operations in getting new business for the 200cc plus motorcycle clutch assemblies and in India for brakes also. And these two businesses will start from the financial year 2022. I would also like to especially point out that Endurance at present is actively involved in technology-oriented and new products, both organic and inorganic growth opportunities in India as well as in Europe. I would also like to mention that in India, Endurance is entering 2 backward integration product areas, which are import substitutes also. This I mentioned earlier. First is the aluminum forging axle clamps, which are required for our growing business of inverted front forks. As you know, we have won business from HMSI and Hero MotoCorp also. Endurance has entered into a technical collaboration with FGM Italy, and production will start at our Aurangabad plant in the first quarter of FY22, which is next financial year. The second product is wire-braided hoses, which are required for the ABS brake systems. These operations will start from this month. We have already got the business. Both the above projects will help us in our future profitable growth. In the first 9 months of FY21, our aftermarket business in India was almost 6% of our standalone India sales. The aftermarket sales were rupees 1,917.1 million in the first 9 months of FY21 as compared to rupees 2,146.8 million in the first 9 months of FY20. So we are seeing a large growth in the aftermarket business, both for supplies in India as well as overseas. I also wanted to update you that our new Vallam plant near Chennai for supplying machined aluminum castings to Hyundai, Kia, Royal Enfield and other OEMs has started operations on the 2nd of February, which is in this month. We are also in the process of acquiring new business from other OEMs for our Vallam plants. We are also at an advanced stage of testing clearance for our ABS brake assembly project, and we will start operations definitely in the next financial year. We have been already allotted the motorcycle for which we have to supply, and it's taking a bit of time, but we'll definitely start in the next financial year for sure. On the environmental front, I would especially like to mention that Endurance is striving to be carbon neutral in its plants by effective use of solar power and wind power, creating carbon sinks by driving tree plantations and thereby creating dense forests, and driving use of natural gas and LPG in place of electric power and furnace oil. Also, lower hazardous waste generation has been achieved by us by switching from painting to powder coating operations in our plants. Hazardous waste generated like paint sludge is sold to different cement plants, and our grinding dust is converted to iron oxide required for the paint industry. We at Endurance are focusing to achieve zero waste to landfill. At Endurance, it will be a continuous endeavor to grow through organic and inorganic growth with a focus on technology upgradation, quality improvement, cost and environmental health and safety. We will do our best to fulfill all our stakeholder expectations by following our 5 values of customer centricity, integrity, transparency, teamwork, and innovation. With these opening remarks, I would like to invite questions from all of you. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Aditya Jawar from Investec Capital. Please go ahead.
Hi, thanks for the opportunity and congrats on a good set of numbers. My first question is on Europe. If you can tell us that what was the share of electric vehicles in overall registration, and at the same time, was there a drag in margin because of that experience in the previous quarter?
Massimo, it's a question for you. Massimo?
Yes. So in the previous quarter of the financial year 2021, the market closed with more or less 25% of registration in electrical vehicles and also hybrid vehicles. So there was an important increase compared to the previous year. And if you can repeat the last question because I didn't understand it. Sorry.
Yeah. So, Massimo, what we wanted to understand in the previous quarter, you had explained it very well that because of sudden, shift to electric vehicles, there was a...
Sorry, but I don't understand. I can't hear you very well. Sorry.
Let me repeat the question. So in the previous quarter, that is September quarter, you had mentioned that because of the sudden shift towards electric vehicles, there was a drag on margin. So just trying to understand that while we are seeing there is a sequential improvement in margin, but as compared to last year, margin for Europe business is still down about 200 basis points.
Yes. Now I understand. So in the quarter, there was a EBITDA contracted by 13.5% compared to the previous year, even if we reached 18.3% in terms of percentage of EBITDA. But this reduction is not due to the electric mix, let me say, of component. The reduction is due to the tooling that are different compared to the previous year for more or less 2.5 million euros due to the new business already acquired. And so the reduction of the profitability is not linked to this effect of mix, At the contrary, in the last quarter, we have had a positive EBITDA compared to the previous year in Germany, where we are producing electrical components. As you know, in this moment, we are producing more or less 1,400 Taycan for Porsche per week. There was an important increase compared to the previous year. In terms of mix, if you analyze only the result of Endurance Summon, we have had the benefit of more or less 1 million euros in terms of profitability compared to the previous year. And so it means that, for sure, as I told you in the past, from my point of view, there will be a reduction in terms of profitability due to the electric technology, due to the fact that they are increasing the number of platforms and also the volume. And so it's normal that the customer will ask to the supplier a sacrifice, a reduction in terms of price. And this can affect our profitability. But frankly speaking, if I consider the 9 months of 2020, 2021, the reduction in terms of EBITDA is not linked to this situation.
Okay, that's quite helpful. Moving on to the India business, what was the share of proprietary business in this quarter as compared to same quarter last year?
You are talking about the share of the proprietary business?
Yes, Anurag.
Yes, so total share definitely, if you ask me, it would have increased by, say about 2%.
Yeah, so Anurag, the question here is that if there is an increase in the share of proprietary business, that is not reflected in gross margin on the standalone business. Is it that because of the commodity inflation that we are seeing now, is it something to do with that? The gross margin on
yeah, so I'll explain to you. It is mainly because of the unprecedented rise in the steel and aluminum alloy prices. It is unprecedented. I've never seen a price increase like this. It's just crazy. I don't understand really what's happening. It's only because of that reason. There is no other reason for this. But let me tell you, also add one more point, that the margins for our casting business are also substantially improving. And to us, frankly, if you ask me in future, we don't want to see a difference between proprietary and casting business margins. That is our focus, because for us, every business is important and we have to make money. Okay? And because of our strategies on the product mix of castings, on the machine castings, going into four-wheeler castings, all this is helping us, and you will see this. So what you see, the increased margins is also because of casting doing touch wood very well in quarter 3.
Okay.
But to answer your question, the gross margin is only because of the steel and aluminum unprecedented increase. There is no other reason.
And we are thinking, of passing on that impact, maybe we come with a lag.
Yeah, so we are hoping for a lag because we cannot stop the production. So we have given spot increases right from October onwards to our suppliers, because we can't stop supplies because business growth is very important for us. You've seen the kind of business growth. But I'm sure it will come with a lag. How much I cannot say, but we are working very actively with our leaders on this.
Yeah. So now my final question to Mr. Ray, what should we expect on the tax rate into Q4 and going into next year? There was, abnormally low tax rate in this quarter.
You take a marginal rate of 25.2% for India.
Okay. That's it from my side. All the best.
Thank you. The next question is from the line of Varun Bakshi from Equirus Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. So my question is regarding the Europe business. So in January, we have seen that a lot of OEMs are facing challenges in terms of production schedules. Because of the semiconductor shortage. So is it seeing some impact on our production schedules also for this quarter in Europe?
Yes, sir.
Specifically.
So we closed the month of January. The market closed with an important reduction compared to the previous year. Italy closed with a reduction of 14%, Germany minus 31%, France minus 6%, Spain minus 50%, and UK minus 40%. This is due to the different reasons. First of all, for sure, As you know, all the OEM had some problem with the supply chain, with the specific part from a supplier, an European supplier. But apparently they are solving the problem, and starting from the third week of February, the situation come back to the normality. The month of January was very low due to the fact that at the end of December 2020, a lot of incentive stopped. And so the month of December was very high considering the COVID period compared to the previous year. I believe that this reduction in January is due to the fact that considering also the first week of holiday for the Christmas period, this is a normal reduction. For sure, is also affected by this problem that OEM had in the last 2-3 weeks. But regarding the volume for the month of February and regarding the volume for March, apparently we are seeing the same reduction compared to the previous year in terms of leverage, more or less from 10 to 15%. I can tell you that the month of January for endurance was more or less aligned compared to our expectation.
Okay. And sir, my next question is regarding this PLI scheme. How are we positioning ourselves to take benefits from the PLI scheme, and what are our strategies to leverage that?
So I think I'd like to answer that. See, if you know the first PLI scheme, which was I think the 2013 scheme, we have already availed 4,660 million approximately of incentive. Yeah. This comes back to us in way of cash back from the government against the IGST credit. Yeah. And now the GST collections are good, so we'll start getting the money. But there's also a 2019 scheme. So if you spend 3,500 million rupees in 5 years, next 5 years, we can get that money back also in the next 7 years after that. And that's why you see I've announced a brakes plant in Baluch. So the more than 90% increase is going to happen in Baluch itself mainly. And we'll get an incentive for investment. So for us to do 3,500 million rupees in 5 years is no problem. So that's how we will use even the next scheme. So I would say Maharashtra is doing a pretty good job. Fortunately, Aurangabad is treated as Zone B, a backward area. So which is a really good thing for us, Okay. So that's how we are using the past scheme. What we have already received the eligibility certificate, we get our money in 7 years. And the other is the 2019 scheme, which we are going to apply in May of 2021.
Okay. So also on this disc brake, like you have mentioned that we are seeing more incremental disc orders from HMSI, Yamaha, Royal Enfield and TVS. So is it fair to assume that it is because of the import substitution that we are getting this orders, or it's more of the new business entirely for the new models and all?
See, I think for TVS, I believe it is import substitution. We already have orders of about 1 million brakes in a year, already started. It will reach peak, I think, next financial year end. And the others is based on, our technology, acquisition of Grimeca, a strong R&D which is there, our price, which is very, very important. We are cheaper than the competition. All this helps us, so we are getting business because of that. And of course, not to forget, the regulation of CBS and ABS has also helped us a lot to supply the disc brake assemblies. It has become mandatory, as you know, for existing for the new ones from 1920, yeah, and from 2021 for the existing also. So the regulation has helped us to increase the brakes business also.
Okay. Okay, sir. Thank you so much for that. That's it from my side.
Thank you. The next question is on the line of Vimal Goel from Union AMC. Please go ahead.
Yes, sir. My question on Europe business has been answered. Just a couple of data points which I may have missed. If you could just give me the incentive number for Q3 and 9 months for the India business, and what was your aftermarket growth in the same period? Thank you.
Mr. Ray, would you like to give the exact figures for the
Yeah, correct. I'll give you the figure. Quarter 3 incentive booking, mega project incentive under package scheme of incentive, Maharashtra. In quarter 3, we booked 234.17 million. And YTD December, the total booking has been 871.49 million.
Fair enough. And sir, your aftermarket revenue?
So aftermarket, I will answer. Quarter 3 saw a 28% growth in aftermarket from 807 to 1,034 million rupees. But if I see the 9-month period, the value went down from 2,146 million to 1,917 million, which is about 10.7 basis points less, 10.7% less. But that's because of the first quarter, as you know. We did hardly 26% of sales in the first quarter of this year. So 10.7% is a decrease in 9 months, 28% is the increase in the quarter 3. And this trend will continue the way we see it.
And sir, is it possible to give us what would be this trend of incentives going forward? I mean, for the next 2-3 years, how much are we expecting to get in?
That Mr. Ray,
I would request you to get in touch with our investor relations department and have a chat with them, because right now we had originally got 367 crores that was subsequently increased by 99 crores. This typically flows over 7 years and not exactly from April to March, because 1 year we started in August, so the last year would be up to July. So there's a calculation around it. So for further details, you can get in touch and they'll help you with numbers.
And one question for Mr. Massimo. Sir, what was the total production growth in Europe this time around? Probably it will help us compare our performance with the overall industry growth. And if you can just break it up between electric and normal ICE vehicles, that will be great, if it's possible.
So first of all, I can tell you which is the trend of our sales compared to the registration, not for the production, because as you know, in 2020 there was a reduction in terms of production higher compared to the registration. But I can tell you that in the 9 months there was a reduction of 24%, and in the last quarter 8.3%. As endurance, we closed the previous quarter with a reduction of 4.8%, and so we have done better compared to the market. In terms of 9 months, we reduced the turnover of 24.7%, and so we are more or less aligned compared to the market. But please consider that we are speaking about production of endurance compared to registration of the market, and so we have to consider that there was an important reduction of the stock to the dealer starting from June 2020 after the lockdown.
Thank you, sir. Thank you so much, sir, and all the very best for the future.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on a good set of numbers. First question pertains to European business. So just want to clarify, are we seeing a 10 to 15% decline in revenues or decline in orders for March 21 based on the trends so far?
Sorry, a reduction of? Can you repeat, please? I'm sorry.
For March 21, are we indicating 10 to 15% YOY reduction in order book or revenues?
Yes.
And this is entirely.
This is the let me say the expectation for the month of February and March, reduction of more or less 10-15% compared to the previous year. Please consider that in the month of January, probably in this moment, we haven't leveraged the total impact of Europe, but as I told you before, Italy closed with minus 14%, Germany 30%, Spain 50%, and so apparently the total market in Europe closed with minus 15, minus 20% in January. The expectation is to maintain more or less the same reduction, 10-15, also for February and March. And I'm speaking about registration, but as you've seen in the last quarter, as endurance, we performed well compared to the market, which was with minus 4.7% compared to a reduction of 8.3% of the market. And so it means more or less 50% higher compared to the reduction of the market.
Okay. And this reduction is primarily because of the supply side issues or anything else? I mean, I missed that comment on that.
For sure, let me say that the situation of COVID is affected the situation, generally speaking, also because, as you know, there are a lot of countries still in lockdown, let me say, and so the situation of the production is not so good compared to the previous year. These are the effects for sure. We closed the previous financial year, 2020, with 13.8 million of cars sold on the market, compare a leverage of the last 5 years of 16.8, and so a reduction of 3 million of cars. From my point of view, 2024, 2022, for sure will be better compared to the previous year, but it's not feasible in this moment to understand when we can come back to a situation pre-COVID.
Understood. Okay. And second question pertains to the India business. So any update on orders for CVT, anything on that front, if you can throw light on?
Yeah, see, CVT, we are actively engaged with basically HMSI and Motocorp. And it is taking a time I would say it's more of a third source for this. That's why it's taking a bit of time. But we are very actively engaged. And we, in fact, the testing is on. So we are focused. It's taking time like it did in ABS. But we hope to get these clearances. We're hoping by next financial year. So we are actively working on the CVTs.
Right. And on the alloy wheels, that was one of the businesses which we were not very actively or aggressively focusing on. And now, given that there is lucrative business opportunity, we are expanding the capacity.
Yes.
Yeah. Are we also now open to looking at alloy wheels for passenger vehicles?
See, right now, we have not looked at passenger vehicles because the processes are different. We are just watching. But I think in the two-wheeler space, there is so much of opportunity. We have to look at the capex. The capex is high for this. Why we are doing expansion in Chakan is that incremental capex will not be that high, though we have to go for a new building. Fortunately, we have land behind of 7 acres. We are expanding there. And we will expand in Chakan because it's better to expand from an existing facility, from point of view of economies of scale, point of view of incremental investments. And definitely we are going to make money in this business. So we are increasing our capacity by 1/3, mainly for Bajaj and Yamaha, and slightly more high-end models. And there are, I know, opportunities out there, so we'll go step by step. I don't want to jump into it fast, but this is a good opportunity for future, for sure.
Right. And any idea about what's the proportion of alloy wheels which are still imported, considering that there is good amount of localization done over the last couple of years?
I won't have the figure, but I know some supplies, I don't know whether China are still coming or they have stopped. But I think with us starting by August, September, I think everything will stop from China, is what I feel. Some premium models are coming from there. I think that will completely stop. That's what I know. I think that's what I feel will happen. Because they are going to de-risk China. Already the process started last year. So this will carry on. And that's why the Indian suppliers are being brought up for the last 2 years by getting extra orders. And so I think it will be stopped. Mainly it's China only by the second quarter of next financial year. That's what I feel.
Got it. Thanks. I'll come back in queue.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Aditya Makaria from HDFC Bank. Please go ahead.
Yeah, hi. This is Aditya from HDFC Securities.
Hello.
Yeah, hi, sir. Congrats on a strong number. There is a lot of noise around two-wheeler sales moderating. We saw that festive also, while was flat, but many companies reported a decline in terms of the retails. And also, if you saw the numbers which came out yesterday, there was a 10% decline in overall retails. So, just wanted to know your thoughts, how you are reading the trends in two-wheeler sales and what is actually happening.
See the way I see the market, to be honest, is slightly different. See, if you see in FY19, the total sales, both in India and exports, domestic and export, was 24.5 million. That was actually in FY19, sorry. So already there was a market of 24.5 in terms of two-wheelers being made in India and either exported or sold in India. This went down in FY20 to 20.9 million. And with the COVID situation in FY21, we saw what happened. But then, I don't know if it was pent-up demand or it was festive demand. But I think, if you ask me, there is no reason why FY22 cannot go back to 24.5 million or more. Because if you see, whether you see a good monsoon, you see the MSP coming in, the government is assuring the farmers, and economy coming back from really downside in FY20 as well as the COVID situation, I don't see why we cannot go back to that 24.5 million figure. So for me, I don't know what is happening today in terms of, I know it's 10% less in terms of, but I'm an optimist. I see no reason why FY22 should not be 24.5 million, barring some external factor, which like a COVID or something else, that's not in our hands. But I'm very optimistic of we going back to the FY19 figures of two-wheelers made in India of 24.5 million. If you see endurance, we are fortunate to supply to a company like Bajaj, whose 45% sales are exported and to more than 70 countries. That's doing very well, as you know. The challenge is more in domestic than in exports. Exports is growing. So that's a good sign for us with a large wallet share for all our businesses with Bajaj. But I don't see in general a reason, I don't see any kind of markers. Now with the vaccine coming out, next 6 months, 8 months, we'll see a lot of Indian people taking the vaccine fully. So I think the sentiment can only go up. I don't see any factor going down. So I think the FY19 sales, the production of 24.5 million should happen, FY22. So that's the way I see it, if you want to ask my thinking. It's my personal thinking.
Right. No, fair point, sir. Thanks for this. And just one housekeeping question. You mentioned you have 4,441 million of new business in this quarter. And what are the RFQs you said?
No, I said 4,440 was won in the first 9 months, because in the first quarter we didn't do much. It was hardly much of a business. And the RFQs, I think I told you it was 11,450 million. None of which I think at least we are hoping to at least get 1/3 of that for sure. It's not that all RFQs we win, but we are very close to winning many of these businesses, at least 1/3 of these.
Got it. Thanks, sir, and wish you all the best.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Arvind Sharma from Citi. Please go ahead.
Hello. Good morning, sir. Thanks for taking my question. Sir, 2 questions, one on India and one on the European business. On the India business, could you please share some more thoughts on the replacement of imports and how it impact endurance? And if possible, can you give the breakup between the various segments, that is casting, suspension, transmission, braking?
See, actually the segments I will not be able to share, but we normally don't share that.
No problem, sir. Your views on import replacement helping endurance,
which is really helping us to grow our profitable business and high value business. In fact, in brakes is one. I mentioned TVS. We believe it's an import substitution. We are at lower prices also. Surprisingly, compared to China, we are lower. And number 2 is on alloy wheels. These 2 we clearly see as very good opportunities going forward. And we are being approached by many OEMs on this. And brakes, so we are just going all out. We are just doubling the numbers. It will be a very large, I would say, product area for us for next year. Very large. The way it's going up. And alloy wheels, I see a good future. Passenger cars are a good idea, a good thought. We will think about it. It is not a bad idea to think of it and approach some of our OEMs. But we can think on that. That's not a bad idea.
Sure. Sir, how big would China imports be in alloy wheels in terms of percentage of consumption in India?
See, I don't know those figures, but at one time I know up to 1.5 years ago they were major. The major were imports, but I know slowly they have been de-risked because other players have come in place of them. I know that. And we have been slowly growing, but now we are growing in a bigger way. So I think we are more going with the Indian players now as the import side. This is not just I think it's a general thing for all the OEMs. So I don't know the percentage to answer your question. I don't know what was, but I know the majority in FY20 was imported from China.
Sure, sir. That's helpful. So on the European business, if you could just talk more about the exposure to electric vehicles, how many of what percentage of order, or what's the trend there, if not the numbers, trend that Endurance has in terms of exposure to electric vehicles? And sir, the general housekeeping question about European revenue, EBITDA and PAT in euro terms.
Okay, no, so I will request Massimo to answer that. But like I mentioned in the past, we have already won 120 million euro of business, out of which 30 million euro is for EVs, mainly for Porsche and Audi, the Volkswagen Group, and the balance 90 million euro is with various customers apart from Volkswagen Group, even for Maserati, for Daimler, for Fiat Chrysler Group. So we have already won this business, which will start, I think, within a year or 2 years, and I think Massimo can throw more light on that. So Massimo, would you like to answer this question?
Yes, absolutely. So as Mr. Jain told you, in the past 3 years, we already acquired more or less 120 million euros for hybrid and electric technology and for the new car that will enter on the market in the next 24 months, in the next 3 years. But please consider that in this moment, more or less 80% of the new projects that we are quoting are for electrical and hybrid vehicles. Apparently, in this moment in the European market, we are seeing a forecast for 2030 when more or less 40% of the total market will be for electric and hybrid solutions. And so there will be for sure a reduction in the powertrain. In this moment, all the OEM are developing new engines in the powertrain division only to assemble this engine with the electric technology. And so starting from, in my opinion, the next 3 years, 100% of the business quoted by the supplier as Endurance overseas will be for the hybrid technology. And so I'm optimistic because in this moment they are investing billions of euros in this technology, and for sure as a strategic partner of our customer we will be involved in this acquisition.
Thanks, Massimo. Just that the euro terms revenue, EBITDA and PAT, please.
Could you repeat, please?
Apologies. Revenue, EBITDA and PAT in euro terms, if possible.
He wants in euro terms the revenue, EBITDA and PAT. For what, quarter 3 do you want or the 9 months?
Sir, quarter 3 would be good, sir.
Quarter 3?
Yes. In the quarter 3, we have closed with 59.1 million euros turnover, with 10.8 million euros of EBITDA, 18.3%, and with a net result of 4.5 million euros, 7.7%, with an increase of 6% compared to the previous year. We closed the previous financial year with 6.9% in percentage of net result, and this financial year 7.7%.
Sure. Thank you so much. Thank you so much, sir.
No problem.
Thank you. The next question is on the line of Nikunj Gala from Principal AMC. Please go ahead.
Good morning, everyone. So my question is on PLI scheme. I think in one of the participants when you answered for PLI with respect to 2013 and 19 policy, that was with respect to the state government, Maharashtra state government policy, right?
Yes, absolutely.
Yeah. So just my question is on the central PLI scheme which they've announced, where they've kept set aside 57,000 crore of incentive for auto OEM and auto components. So are we looking any opportunity in that, and if yes, what kind of opportunity you see in that scheme of things?
Okay, I will request Mr. Ray to answer that question.
We've heard about this production-linked incentive scheme, and industry was also asked to give views in August last year. But since then, there's been no announcement from government as to how the schemes will work. All that we know is that out of the 4 schemes, production linked incentive scheme and component champion incentive scheme,
Right.
these two schemes would be applicable for companies like us, and to our understanding, they are linked to, in one case, it is linked to long distance sales increase, and the other one, willy-nilly talks about export increase. So unless we see the final scheme, it would be very difficult to say how it impacts imports.
Okay. So any internal work, you might have done, like kind of opportunity you see in the export market, or any new component, or any, component substitution for the import, like any internal working, which you might have done for that?
We have not done specific work which is tailored towards this policy, because we need to see the policy in detail and understand what it means for us. Then only can strategize.
Sure. Okay.
Sure. But I would just like to add that being in Aurangabad in a backward area, Zone D, the kind of incentives you are getting from Maharashtra state are just fantastic. I don't think the PLI can ever match that as far as endurance is concerned, is what I feel. Because I got some sense of it, but it will be more export oriented, I think, as far as this PLI scheme is concerned. They want to encourage exports. But what we are getting as a PSI, a mega project incentive in Maharashtra, luckily we are in Aurangabad, is not for Pune or other areas. I think that will be a real benefit for us for the future.
Sure. Okay. Thank you, sir. Thanks a lot for your time and inputs. Yeah.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir, congrats on very strong numbers. Firstly, in this brake assembly, we're getting a lot of orders. So what would be our share currently in this segment in India, and basically based on the order that we got, where we can go up to next year?
Yes, see, I'll just take a minute. You just give me what was your second question?
So I'm asking that what is the current market share in India, and based on order that we have got and we're expecting a big ramp up next year, what would be our market share next year roughly?
See, right now for the brake systems, our market share is about 29%, and it could be 29 or say 30%. And for the discs, it's 45%. We're a major supplier of discs to everybody. That's why the capacity we are taking up to 6.75 lakh numbers a month. And so right now it's at 29%. What was your second question?
So based on the order that we have got, where it can go up to next year?
Means you're talking numbers?
Yeah, roughly the market share number can increase to how much next year, I'm asking.
See, it is going almost 90% up.
19%.
30 into 90, we can go to almost 55%.
30 plus 19, you said, 19, right?
90% of 30, I'm just taking a 25% additional. So 30 plus 25 is 55. So I think we can go to 55% of the market. So we'll be the major player for brakes based on all the orders we have won.
Oh, that's really commendable. And sir, what part of India requirement is currently imported? Is this complete unbroke substitution, or there's some bit of market share gain from domestic players as well?
No, I would say, like I said, there's a Chinese substitution with one of the OEMs.
Okay.
Secondly, definitely based on price, we are taking a better share of business. The acquisition of Grimeca has helped us on technology to enter the 200cc plus brakes business. That's helping us. And thirdly, the regulatory norm which came in FY19, in FY20 and FY21, where it's mandatory to have CBS up to 125cc. So all this will help us, to be honest. It's a combination of all these factors.
And the disc, how much it will increase to? This from 45%?
Sorry, the discs?
Yeah.
That will go up to, could be even 70% maybe.
Oh, wow. And so lastly, sir, like say, we are saying that we have got some ABS orders will probably start next year sometime. So like we have done this localization in this brake assembly this year, next year. Can a similar thing happen in ABS as well, maybe over next 2-3 years? Is that a possibility that we're looking at?
See, ABS is a very big focus area for us. I'll be honest, we had cleared it already for the initial model, but later that model got changed, which required a calibration to be done again. But that calibration is not that much time consuming. As I said, we were 2 years late on this, including the COVID-19 period. The people couldn't travel at all. So we will definitely start. We've been allotted the first model itself. The pricing is clear. Everything is clear. We just have to pass this calibration and we start. Okay. So next financial year we'll start. And as we start with one, we'll go on to others. Because see, our technology is very good. Nobody can match our pricing, in the industry. So I see no reason. And like I said in the past, I've always entered in a small way. And we have increased business on the quality, on cost, and on technology. And so I see no reason. And there are very few players. ABS is only Bosch and Continental.
Yeah.
Nobody else has technology in India. Nobody else.
No, definitely we've done very well, sir. And lastly, sir, what is the content of these ABS in a two-wheeler, also brake assembly content in two-wheeler?
No, sorry, I didn't understand the question. You are saying in general, the ABS value, you are saying?
Yeah, in a vehicle basically, and in a two-wheeler.
I don't know, actually it depends on the vehicle pricing. I don't have the answer, to be honest. That you can ask the OEMs here.
Okay. No, for our supply, what is it like?
Double channel ABS depends on the vehicle price. Vehicle configuration. So it depends on vehicle to vehicle.
Okay. And sir, lastly on this side, what is the content? This assembly, what is the cost for a two-wheeler roughly?
This way.
Brake assembly.
I can say more than 1,000 rupees per set. And depending on the vehicle, it can go to even double it.
Okay, sir. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Prateek Poddar from Nippon India Mutual Fund. Please go ahead.
Yeah, hi sir. So just on standalone, one question. If I look at the underlying EBITDA margins, there has been a substantial improvement led by employee cost, other expenses. Could you just talk a bit about sustainability of this? That is question number one. And second question is to Massimo. Sorry, I just wanted to confirm, is demand a problem that we are seeing January, February and March sales down 20% on a YOY basis?
Okay, so should I answer first for the India part?
Yeah, for anything.
So if you saw Q3 without the mega project incentive, I don't count that is extra, okay? We did 15.9% EBITDA, standard.
Right.
And this included our 112 million payout to the workers. So actually it was 16%, slightly more than that. So what I would say is, that going forward, as you know, RMC percentage to sales makes a big difference on the EBITDA, So I would say the spread can be anywhere between 14.5 to 16. Depends on it depends on the RMC percentage, We are at 15.9, you have seen that. So I can only say this is a kind of a wide range, which is there. But I like to talk, to be honest, a bit less. I don't like to dwell too much on these numbers, but definitely I've always said in the past, we are a profitable, focused company, So definitely, if you see on the employee cost as well as the variable cost, it's a very high focus area for us, and that we will try our best to sustain with our sales growth also, which is what happened from next financial year, with new orders which we have won. So, but the range can be, but definitely, I think the range is wide, if you'll answer me. But the way the steel price increases have increased, steel and alloy. And but at the end of the day, you are seeing 15.9%. But if you want me to say it will be 15.9, I will not comment. It will be 14.5 to 16. I can show you. steady.
This is really helpful, sir. But is it fair to say that the band has clearly moved upwards, and now with next year also, share of proprietary products increasing,
No,
the band will.
see, the band has moved upwards, but see, let's not differentiate now proprietary and casting. Sometimes there's a mindset. That's why I've said it myself. Casting, we want to take it up as much as proprietary. That's our focus. Okay, there could be slightly here and there difference. So for us, both businesses are as good because we only do profitable business, and so that is going to be our focus. If we can do high margins in Europe, why can't we do it in India?
And sir, what are you doing to take casting business up? I mean, margins? What is the
See, it is a better product mix going into full machining, going into passenger cars and commercial vehicles. That's a Hyundai, Kia and Tata. We have got a lot of orders. You can see a new plant at Vallam coming up. And we are talking to other OEMs also for that Vallam plant and for our plant in Chakan, Pune, for the passenger car, including exports. So I see no reason why casting now will be left behind in future.
Okay, sir. So that means that margins are only upside bias and not downside bias, at least from.
So my answer is 14.5 to 16. Huh? That's my answer.
Yeah, got it, sir. Sure. And the second question to Massimo.
Yes. Can you repeat the question, please?
No, I was just asking you, why are you saying that demand in the month of February and March is also looking weak, similar to January? What is the primary reason? Is it demand?
So from the primary reason for sure is the situation of COVID that continue to be very critical in the European market. The second is this problem that the OEM are having with the supplier for the electric component, and apparently this problem will affect the business till the third week of February. For sure, the month of March, probably compared to the previous year, will be better due to the fact that, for example, in Italy, we have had a lockdown starting from the second week of March in 2020. And for sure, there will be an increase compared to the previous year. But considering a leverage of more or less 1.5 million of cars per month that we have had till the end of 2019, in this moment, we are doing 1 million of cars per pound, 1.020. And so it means that we have a reduction of 10-15%. And let me say, without consider the situation of the COVID, this is normal for the European market because we grew for 6 years without any kind of problem starting from 2012. And so from my point of view, it's normal that there is a reduction. Also, for sure, due to the change of technology. Because in this moment, the appeal of the people, they prefer to buy electric and hybrid car. But the problem is that, and this is the absurd of the situation, if you go to buy a car to the dealer, you can wait in this moment for a German car as Daimler, as BMW, as Volkswagen, 8 months, 9 months before to receive the car. And so it means that even if there is a lot of requests, in this moment the OEM have problem to serve the market. This is the situation.
Got it. Thank you so much. Got it. Thank you.
Thank you. The next question is from the line of Ronak Vora from AUM Advisors. Please go ahead.
Hi, sir. In the earlier comments, you said that with more EVs coming in, the business and the revenues along with the margins would decrease. Can you just elaborate on that?
Massimo, that question is for you.
Yes. So my view is that in the next years there will be an important increase of volume in the electric and hybrid technology, and there will be also reduction in terms of profitability due to the fact that in this moment all the OEMs are reducing the number of platforms. As you know, in the past we had several different products for the powertrain business due to the continuous changes in the normative, because every 2-3 years there was a new restriction by the European government in order to respect the NOx. Now, with the electric technology, this platform will have a period of life of more or less 10-15 years. And so it means that from one side, the supplier will invest less compared to the past, and we will have the possibility to depreciate better our investment. But it's also true that the customer, the OEM, are trying to compensate in the supply chain all the costs that are spending for the research and development and for the new business. And so the pressure on the price will be very, very, very tough in the next financial year. For this reason, I always told you that from my point of view, there will be more or less the same impact in terms of net results, because we will be able to recover with the less depreciation, the less EBITDA in terms of profitability.
So can we quantify in terms of how much would be the reduction in margins or top line?
So the reduction in margin is very difficult to say what will happen in the next 2-3 years, because this will depend on the volume. Because at the end of the day, if the volume, if a company has endurance, is able to take new business, and take new business in our market, it means take business to other competitors. Because please consider that in the European market we can't grow more than in the past, 16 million of cars per year. And so the strategy is to take business from our competitors. If we are able to take business more than in the past, we can compensate the reduction in terms of EBITDA, in terms of price, with more volume. Okay. But in the past, we started with 13% of EBITDA and we reached 20% in the previous financial year. Now we are closing with 18%, considering the COVID situation. Our target is for sure to maintain and to improve our EBITDA. But I believe that in terms of net result, we will have any kind of impact. This is our target.
Okay. So can we say a specific range that you can give, if possible, just to get a better picture? 2 years down the line, 3 years down the line.
Could you repeat, please?
See,
could you repeat the question?
No, I'd like to answer that. See, very difficult, like Massimo said. It will depend on the volumes, the product mix, the advent of EVs and hybrids, which will come in Brazil as ICE engines. We've already said we have won 115 or 120 million euro of new business for EV and hybrids. So very difficult to give a number, because we have to take it year by year. Very difficult to give a future projection. We don't like to give these projections for the future. We just like to say higher than industry growth. We've always said that since IPO, as you know. I've never put a figure.
Okay. And last one, if you can squeeze in, with the whole EV, technology and everything, how much revenues come from the core engine parts, which might be replaced with the EVs coming in, and if that can be substituted with some kinds of battery housing that you were saying earlier?
So in this moment, more or less 45% of our total business is with gasoline and diesel technology for internal combustion engine. As I told you before, we are substituting this part with a new quotation for the electrical component. And regarding the previous question, please consider that when I speak about a reduction in terms of profitability, it's due to the fact that in the past, the strategy of endurance was to take business with a maximum payback period of 5 years. Okay. Now we are taking business with a life of product of 10 years. And so it's normal that the customer has to have a reduction of price compared to the past. Because in terms of the net present value, the return of the business is the same. But the difference is that before you had the payback of the investment in 5 years, now you have the payback of the investment in 7 years, in 8 years.
Okay, sir. Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead.
Hi, good afternoon, and thanks for the opportunity. Anurag, just wanted to get some sense how much is our total value content per the vehicle, in two-wheeler, and with the introduction of BS6 and now whatever, our new initiative with alloy wheel as well as brake. So how do we see, increasing, and what level do we, in couple of years it can really hit?
See, like I've said, normally 15 to 17% of the ex-factory selling price. I'm saying average.
Okay.
For our four segments, if I enter a fifth or sixth, that will be added on, of course, in future. But the four product areas we have today, I think 15 to 17% of the ex-factory selling price is a good figure to have, So, for example, Bajaj, we are there almost,
Correct.
If I talk about, this thing, RE, we could be around 11 to 12%.
Okay.
Because they have a lot of other add-ons, Hero and HMSI, Yamaha, we are increasing now. It may be at about 5 to 8%, except for the Activa. Because the scooter front fork coming in for the scooter, there we are at almost 13%, which is quite good for the scooters, which is a major part of the HMSI business, So the question is, so right now we are at 11%, but we'll go to 13% in future for the Activa. So I would say 15 to 17%. With the advent of the BS6 and the brake systems, I think that's a good figure on the ex-factory selling price.
And currently, what level, is it?
See, so just we are there. I told you 11 to 13% for RE. Okay.
Average.
The overall average I cannot give you. It's a weighted average. I have to calculate it. But I'm giving you for major customers.
Okay.
See, most of the people are between 5 to 7, 8, except Activa is at 11, we'll go to 13. Bajaj is all, of course, 15 to 17. RE is at 11 to 13, like I said. Because see, wherever we are supplying all the four product areas, we are definitely at 11, 12. Because see, RE must be having other add-ons also. I have to understand what is going on. But as brakes business is increasing with RE, I think this figure will go up. So 15 to 17 is a, I think, good figure to have. And as you know, BS6 price is also higher now, as you know. So when I say 15 to 17%, that's a good figure. In fact, earlier with RE, we were at 14. We went down to 11 to 13 after the BS6. But we had reached 14% with them,
Okay.
So 15 to 17 is what you should take.
Okay. And on this European business, this decline we are seeing in registration, what we are talking of, say 15 to 20%, that is largely for ICE engine based car or overall including EV side also?
Overall, including EV, is generally speaking a reduction of the market in each product. For sure, in this moment, we are increasing the volume for the electrical component for Porsche because they are presenting the new car to the market. But let me say, the reduction is, generally speaking, in each segment, internal combustion engine and also electrical vehicles.
And is it possible to say how much decline in IC engine and EV, if there is a substantial difference?
No, in this moment is not. I can't give you this info because we have to receive this info from the dealer, from the customer. We haven't this kind of information.
Okay, great. Thank you. That's from all the best.
No problem.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Nishit Jalan for his closing comments.
Thank you, Lizanne. On behalf of Axis Capital, I would like to thank the Endurance management and all the participants for joining the call today. Mr. Jain, if you would like to have any closing remarks, and after that we can conclude the call.
No, I'm fine. I've said in my opening remarks, whatever I needed. I'm fine.
Okay. Thank you, everyone.
Thank you. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.